All right, joining us now is Mandy Xu, equity derivative strategist with Credit Suisse, on really the hot topic of the moment, which is the increase in volatility in these markets. Mandy, it's very timely for you to join us. Thank you both very much. And in some kind of plain English, layman's terms, can you talk to us about, at least on a basic level, what happened in the market Friday through today?
Yeah, no, I think that's very interesting to distinguish the market action Friday versus what we saw yesterday. So I would say in terms of the correction that we had on Friday and the jump in volatility, that was very much fundamentally driven, right? We had a clear catalyst, which was the better jobs number, and more importantly, the higher than expected wage inflation number that really spooked the markets. Rates went up, rate volatility went up, and that spilled over into the equity market, and we had the VIX up. But the move in the VIX was very much in line with the S&P move. When you contrast that with what happened on Monday, I would say Monday was very much a technical-driven market sell-off, right? There was no clear catalyst, no news, no macroeconomic data. We had, a clear overreaction in the market. VIX shot up, 20, 30% points, biggest one-day increase. And again, if you look at the price action in the S&P, I think a lot of it is very technical selling, right? As S&P went through the 50-day moving average, we had, large future orders, sell orders that drove the market down 2% in a matter of minutes. So to me, that looks like technical selling, not fundamentals based.
Was it panic?
It's interesting. So obviously the speed and the magnitude of the move would suggest panic. But in terms of actual flows that we saw on our desk, it was not panic. We did not have customers coming in to, panic buying of protection or unloading positions. I think especially today, we're actually seeing the reverse, right? We're seeing customers taking advantage of the elevated levels of volatility to come in and unwind some existing hedges, right? Some big VIX protection upside calls got unwound today. So I would say in terms of flow, in terms of sentiment, it's very constructive. And you can see this actually in the CS Fear Barometer, which is an index that we look at that we think is a better measure of investor sentiment than the VIX.
Can this level of volatility be sustained? Can it continue?
Yeah, that's the question of the day, of course. If you go back and look at historical regimes where volatility was sustained, it's usually accompanied by a fundamental deterioration in the market, whether it's a risk of recession or sovereign debt crisis or credit crisis. I think against the current backdrop, which is very much, positive, whether we're looking at, positive earnings growth, synchronized, global growth across all the major world economies, still subdued levels of inflation. I think against this backdrop, it's going to be very hard to see sustained level of elevated volatility. And I would, in fact, expect the volatility to start to normalize.
Okay. Well, I know a lot of people out there certainly are hoping that is the case, including some financial news hosts. Mandy Xu, Credit Suisse, we appreciate your time. As always, thank you for laying it out. Appreciate it. Thank you, folks, as always, for tuning in. Check out the live version on Power Lunch every day. I'll see you there as well. Take care.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.